Tom Lee just dropped his most explosive Bitcoin prediction yet, and the market completely missed what he's really saying. While Bitcoin trades sideways at $105,300, Lee isn't backing down from his targets. He's doubling down. His 2025 target of $150,000 to $250,000 still on the table, but now he's openly discussing $3 million long-term on CNBC. You heard that right, $3 million.
Still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your 150 target?
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. And if you look at above ground gold, it's probably 23 trillion. So that would be, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, Bitcoin could be 2 million, 3 million long term. Even higher.
And before you think this is just another crazy crypto call, let me show you exactly why Lee's confidence is actually growing stronger, not weaker. Here's what everyone's missing about Tom Lee's $3 million prediction. This isn't some random number he pulled out of thin air during a bull market euphoria moment. Lee's been studying Bitcoin's supply and demand dynamics for years, and he's seeing something that most analysts are completely overlooking. At $3 million per Bitcoin, we're talking about a market cap of roughly $63 trillion. That sounds massive until you realize the global bond market is worth $130 trillion, and global real estate is over $300 trillion. Lee's essentially saying Bitcoin could capture 20% of the bond market's value, and when you understand Bitcoin's superior monetary properties, that's not unreasonable at all. The pathway becomes even clearer when you look at institutional adoption patterns. Lee points out that we're still in the early innings of pension funds, insurance companies, and sovereign wealth funds allocating to Bitcoin. When these massive pools of capital start putting just 1 or 2% of their portfolios into Bitcoin, the math becomes pretty straightforward. There's only 21 million Bitcoin that will ever exist, and institutional demand is growing exponentially. Lee's not predicting 3 million because he's optimistic. He's predicting it because the supply and demand equation literally forces prices higher until equilibrium is reached at much higher levels. Tom Lee has been talking about this macro setup for months, and it's finally starting to play out exactly as he predicted. The upcoming jobs report could trigger Federal Reserve rate cuts, which would flood the system with liquidity. And Lee knows exactly where that liquidity goes when investors need protection against currency debasement, straight into Bitcoin and other hard assets with limited supply. This isn't just theory anymore, it's happening in real time, and Lee's positioning his clients accordingly. What makes Lee's Federal Reserve analysis so compelling is his track record. He's been calling major market moves based on Fed policy for years, and he's rarely been wrong about the direction. When he says lower interest rates create the perfect storm for Bitcoin's next major leg higher, he's not guessing. He's applying the same macro framework that's made him one of the most respected strategists on Wall Street. The Fed might think they're managing employment and inflation, but Lee sees them setting up Bitcoin's next parabolic move, and here's where Tom Lee really separates himself from the crowd. While everyone else is worried about Bitcoin's sideways action and calling for corrections, Lee sees this as the setup he's been waiting for. He's called this the most hated rally of all time, and for Lee, that's actually a bullish signal. When institutional quality assets trade sideways at historically high levels while everyone expects weakness, it usually means smart money is accumulating on any dips. Lee's contrarian instincts have served him incredibly well throughout his career. He was bullish on stocks when everyone was bearish in 2022, and he was calling for new highs when most strategists were predicting recession. Now he's applying that same contrarian thinking to Bitcoin, and his reasoning is bulletproof. If Bitcoin can hold $105,000 despite all the bearish sentiment and macro concerns, what happens when sentiment shifts positive? Lee believes we'll see explosive moves higher, not gradual increases. One thing that keeps Tom Lee incredibly bullish on Bitcoin is the institutional adoption curve that's still accelerating. Lee's been predicting this institutional wave for years, and now we're seeing pension funds, insurance companies, and central banks exploring Bitcoin allocations exactly as he forecasted. When the state of Wisconsin Investment Board adds Bitcoin to their pension fund, or when major insurance companies start holding Bitcoin on balance sheets, Lee sees validation of his long-term thesis. The beauty of Lee's institutional adoption analysis is that he understands the network effects. Once a few major institutions establish successful Bitcoin positions, it becomes much easier for others to justify similar allocations. Lee's watching this play out in real time, creating a steady stream of large, price-insensitive buyers who aren't worried about short-term volatility. These institutions buy Bitcoin as a long-term store of value, which means they hold through temporary weakness and rarely panic sell during corrections. The more you study Tom Lee's current Bitcoin call, the more you realize his timing might be absolutely perfect. Lee's starting from a base of $105,000 with stronger institutional infrastructure, clearer regulatory frameworks, and better macro conditions than Bitcoin has ever had. If Bitcoin could rally from 40,000 to over 100,000 in the previous cycle, Lee's asking what happens when you start from 105,000 with even better fundamentals. Lee's not just throwing out random price targets, he's applying the same analytical framework that's made him one of Wall Street's most successful strategists. His Bitcoin analysis incorporates everything from Federal Reserve policy to institutional adoption patterns to global liquidity flows. When Lee says Bitcoin could hit $3 million long-term, he's not being optimistic, he's being analytical. And based on everything he's seeing in the market structure, supply dynamics, and institutional adoption trends, his targets are looking more achievable every day. This isn't investment advice, but Tom Lee's track record speaks for itself. When one of Wall Street's most respected strategists goes on CNBC and discusses $3 million Bitcoin while doubling down on his near-term targets, it's worth paying attention. The market might be focused on short-term sideways action, but Lee's looking at the bigger picture, and that picture is incredibly bullish.